So, as you guys know, the executive order goes into effect tomorrow, and this will affect, as it has affected in the past, the most heavily shorted stocks. Not only AMC and GameStop, but you're talking Redbox, BBBY, BB, a lot of other stocks as well. Now, AMC, GameStocks, potentially Redbox, those are going to be the biggest potential winners here, and for obvious reasons, I think AMC is going to be the best stock on a risk to reward basis. It's definitely more appealing than GameStop. It's most certainly more appealing than Redbox. So let's talk about exactly what I expect to happen tomorrow. The last day, or the last time the executive order went into effect on the first day was May 27th. And that was 2021, and the stock went up about 35.5%. So I want to go over kind of what I expect tomorrow, what I expect over the next coming week, because I think a lot of people have the wrong conception in their mind that June 1st, June 2nd, June 3rd were going to be the biggest days, and they should have been bigger days in my opinion. Yes, we are up like 30%, 5%, something like that, from the bottom that we just seen about 2 weeks ago. So it has been a pretty good move, but next week is when you can expect to see the even bigger moves like we seen back here, right? Went into effect May 27th. You actually didn't peak out for 3 additional trading days after that. So let's get into all of this key information. Cost of borrow rates have been exploding through the roof today, and we do have some other things to get into as well. So hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Get your free stocks with Webull, Moomoo, and Public down below in the description of this video. If you guys do that, you might have time to make yourself a free trade on AMC stock, and that could be the best risk to reward that you could get by just getting yourself some free money. So definitely check that out if you guys want access to all of my trades in real time. Link down below in the pinned comment as well. But nonetheless, let's save you guys that bullshit. Let's get into this video. So the executive order goes into effect tomorrow. Now, if you guys don't know what this is, it is essentially saying, hey, hedge funds can no longer use Chinese securities as collateral, which went into effect in January 2021. You got the rally, right? The first rally with AMC went into effect May 27th. You got the second rally with AMC stock. So literally, if you line up the dates this executive order went into effect and then was postponed and retracted, you will find that every single time it went into effect, the stock 10x'd in value, right? Every single day it was retracted. That's when the stock peaked out and continue to fall. Now, I think the biggest question and the biggest uncertainty is not, is the stock going to rally? It's how long is the executive order actually going to stay into effect? Now, I've talked about this many times, but I do think it's more of a widespread consensus now that Chinese securities are bad and they should probably not be used in the American financial institutions, right? They shouldn't be used to service debt when essentially China can do whatever the hell they want. They can delist stocks, they can take them private if they want to, they could shut down the whole business if they want to, right? We've seen that over the past year, and overall China's not in a really good situation. So I think it makes a lot of sense to keep this executive order in effect this time around, and I think you are going to see a pretty explosive move in AMC stock, and we'll talk about that more in just a second. But we did get news today, for an example, and I just want to use this as an example, that Tiger Global is down about 54% in the first 5 months of 2022. They are a very large, or 52% for the year throughout May, and that was a letter they had sent out. Tiger Global is a very big hedge fund. I believe they have about $50 billion of assets under management, so they have lost a lot of money. This is like 1/6 the size of Lehman Brothers. They caused the 2008 financial crisis. So it's a pretty big situation, not only for Tiger Global, but it gives you a hint into how other hedge funds are potentially doing. And some of the smaller hedge funds that potentially are down a similar amount, if not more, they're going to have a very hard time covering on their short positions, or at least putting up enough collateral or cash to remain in their short positions without actually covering. So when you take out the Chinese securities, not only are the hedge funds down, not only is the NASDAQ, S&P, Dow, bond market, all of that is destroyed, but now you can't use Chinese securities as collateral. That is huge, very, very huge in this day and age where the market currently sits. That just screws the hedge funds. Like, we've seen it happen in January, we've seen it happen in June, and now I think this time's going to be much, much bigger. And, you know, hedge funds are in a very bad situation right now. But nonetheless, let's talk about the Ortex data, and then we'll dive into kind of what I expect as far as price action over the next coming couple of trading days, if not the next couple of weeks. So short interest of free float is at 23.1%. Current shares that are sold short of 119.07 million. Cost to borrow average at about 12%. Cost to borrow max at about 20%. So these rates have jumped exponentially today. You know, cost to borrow max has went up a lot, now at 20%. It was not even close to that yesterday. And obviously this is because the executive order is going into effect tomorrow. People want to charge more to, you know, lend out their stock when there's a potential big catalyst around the corner. This is basically saying, hey, people think in the near term future AMC stock could move up over 20%, right? That's why they're charging 20% as the cost to borrow rate. Short interest at 23.1% goes without saying. That is extremely high short interest. 100% utilization. It's been like that for months now. Cost to borrow, excuse me, is saying about 4.03% over the past 7 days, and that's up about 72.73%. Days to cover is sitting at 3.42. Shares out on loan 176.43 million, also up about 4% over the past 7 days. Free flow out on loan about 34.23%. So there is a lot of shares that are still out on loan that could be sold short against us. Roughly about 60 million shares that could be sold short against us. So you have that kind of looming over our head, but I think it's kind of financial suicide at this point to just short stock right before a potentially massive catalyst for AMC or for just the broad markets, right? The most shorted stocks are probably going to be the ones to rally the biggest. But the interesting flow sentiment, 13 orders totaling $1.47 million, positive order value of 57%. So looking pretty good over the past week, 134 orders totaling $55.22 million, positive order value of 47%. So looking pretty good across the board as far as that is concerned. Now, if we take a look at the option chain, because obviously, as you guys do know, a gamma squeeze does affect the price of a stock equally, if not more than shorts actually covering. Jeez. Ooh, I'm getting clapped. For June 17th, you're looking at about 11,000 calls that are in the money, 259,000 calls that are out of the money. Looking at about 92,000 puts that are in the money. So that is a lot of potential buying power from the call side as well as from the put side that the market makers might have to hedge out for. And I imagine they will. The ratios here are pretty bad. 11,000 calls in the money compared to 260,000 that are out of the money. There's a lot of potential to see a lot of those calls run into the money. But not only that, you do have July 15th, 21,000 calls that are in the money, 318,000 calls that are out of the money, and 52,000 puts that are currently in the money. So not only could you potentially be looking at a gamma squeeze for the next couple option expirations, like including this Friday, 181,000 calls that are out of the money, about 14,000 that are in the money. Not only this Friday, not only June 17th, but you could also be looking at a gamma squeeze across the whole entire option chain. I've talked about this before, but for an example, for July 15th, because the price of AMC is so low, sitting at about $13 per share, if you go out and buy, say, a $20 call for July 15th, you're probably going to pay $150 for it, roughly. Your break even's $21.50. Well, if you see the stock go to, let's say, $21.60, the market makers have to go out and hedge out even these options that are way down the line, that are 2 months out or so. So there's that, and I think that's going to be very, very important, a very important thing to at least acknowledge. Now, you do have economic data that does come out tomorrow as well, which could be somewhat important for overall market sentiment. Unemployment rate for May, 8:30 a.m. That comes out 8:30 a.m. as well. Non-farm payrolls come out. Participation rate, average hourly earnings, non-farm payrolls, manufacturing payrolls, government payrolls, average weekly hours, as well as ISM non-manufacturing PMI comes out at 10 a.m. And then you do have Fed Brainerd that also does speak tomorrow as well. So I don't think that'll really affect AMC stock. I don't think it'll really have a big deal in the grand scope of things. This executive order is a much, much bigger deal. Now, as far as kind of what I expect, I do think tomorrow can be a quite substantially green day. And it wouldn't surprise me to see the stock go to about $17, $20 per share tomorrow. It's very possible you could see a big move if the executive order does stay in effect. and it does not get retracted tomorrow, then next week is really when you're going to see the monstrous moves, in my personal opinion, where you could see a lot of FOMO heading in, you could see a massive gamma squeeze, and you could see a lot of shorts that get forced to cover, because I think a lot of people fail to realize that it's not necessarily about what the price of the stock is or what the price of the stock has been doing, right? The price action of a stock to determine margin calls or not. No, margin calls are simply, like, if you guys have never got a margin call, you might not understand this, and I know a lot of people don't, but a broker, a bank, whoever you invest with could say, hey, you got to deposit X amount of dollars in your margin account or we are going to close out your positions. Well, then a hedge fund, they could say, well, we got this Apple stock over here, we got these bonds over here, we got, you know, Chinese securities, whatever, to put as collateral for that margin call, and they can remain in their short positions. Well, like I said, you have basically all equities that are down dramatically. Bonds are down dramatically. The global markets are down dramatically. Chinese securities no longer can use those. So it's very hard to service that margin call. If you cannot service that margin call, then you'll have to start covering on your positions, and likely an AMC short position would be one that you'd be more inclined rather than not to cover on, because of how risky it is, and potentially, you know, some of these shorts that shorted, say, at $20 per share are probably up, you know, 45-50% on their positions overall. So that's kind of what I expect, and then I do think next week you could break out to these massive highs and possibly even hit new all-time highs. But keep in mind, I'm not a financial advisor. I don't know exactly what is going to happen. All of this is based off of the last year's price action, right? What happened in January around the executive order, what happened in June around the executive order, and kind of extrapolating how the market conditions have really changed since then, because you gotta just acknowledge how much different market conditions are from, you know, this period, January through June, and what we're looking at right now. It's a much different ballpark that we are in for our benefit, right? This is all going to help us, you know, get those margin calls out and to actually see those forced share liquidations and forced coverings, essentially. Now, the RSI is at 47.35, and the MACD is very, very bullish. You're looking at volume of the day about 42.3 million, so you definitely have a lot of room for higher volume to come into the stock. Higher volume should mean bigger explosive moves in AMC stock, and that's what I expect tomorrow. So that's basically going to be all for this video. Hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. If you guys want to trade with me live in real time, link down below in the pinned comment, and get yourself those free stocks, Webull, Moomoo, and Public. I wanted to keep this video short, sweet, straight to the point, so everybody can get the information and don't have to hear anything that is really unnecessary in regards to the executive order. So let me know, seriously, let me know your thoughts down below in the comment section. We will be live in between 10 and 11 p.m. Eastern Standard Time tonight, unless I just don't feel good still. Hopefully trying to take care of that, but nonetheless, thank you guys for tuning in. I will see you in the next one.